Hi, and welcome to Your Prosperity, a podcast series on financial topics including tax, wealth creation, superannuation, lending, audit, and many other things that we deal with here on a regular basis at Prosperity Advisors. As with all financial podcasts, any advice you hear in this is general in nature and not to be relied upon. Please contact us for any specific advice. Hi, and welcome to the podcast. It's the 17th of June, 2022. My name's Brendan Campbell. I'm here with Alex Hardy, who's part of our corporate assurance team at Prosperity. And Alex is going to talk to us about fraud and I guess the common types of fraud, how we can identify it, what we can do about it. All things, that great topic of fraud, which is not something we want to have our clients involved with, but something, unfortunately, in this world we've got to deal with. So, Alex, thanks for joining us on the podcast.
Yeah, thanks, Brendan. Great to be here. For those just with my title, just around corporate assurance, I guess just good to know what that means, audit and risk advisory work. So not only conducting audits for clients, but also, I guess, advising clients how to manage risk within their businesses. So yeah, good to be here, Brendan. Good to be talking about these topics. It can be a little taboo and things that people don't like talking about, particularly when something has gone wrong. But yes, let's try and equip the public out there with some skills and resources so that they can help prevent fraud from happening in their businesses.
Absolutely. And as you said, you're an auditor, but we call it corporate assurance, and everyone does these days. But it's the layman's term. You're an auditor. So
yeah, thanks, mate.
So on our topic, fraud, I guess in my limited experience with understanding fraud, as I'm not an auditor, I don't look at that sort of stuff, and it's not something on my radar, but something you do look out for. I've always sort of thought it's it's where you need the two things in my head, which was always need and opportunity, where someone has a need for it and has the opportunity. I guess I've heard you mention it recently, though. You talked about the triangle of the fraud.
Yeah.
Talk us through what that is. I think it's a little bit similar to how I've thought of it, but maybe a little bit more developed.
Yeah, certainly. So I guess it is a good place to start, just thinking about when and how fraud can occur, just conceptually. And you are right. So from a need, I'd refer to that as pressure or incentive. And that's one side of the triangle, which you got.
And that's where someone has a need where they might have a gambling problem.
Yeah, gambling problem.
Issues at home or something.
Debt. Want to show off. Lots of different things.
The Tahitian prince, for those in Brisbane, remember a few years ago.
It's a blast from the past. I guess, and Brendan's referring to an example with a Queensland state government agency from about 10 years ago there. But yeah, so there is the need. I guess in that instance, I guess it was about showing off more than anything else. But do remember Australia's per capita the highest gambling nation in the world, and so we do see some problem gambling habits pop up and be one of the sort of needs for money or the pressures. You correctly identified another side of that triangle, which is opportunity. So just because you need money, if there isn't an opportunity to have that some funds or a portable and attractive asset or other things, obviously the fraud can't occur. So opportunity is necessary.
Mm-hmm.
But lastly is something that's fundamental within most fraudsters' minds, which is the rationalisation. So I'm entitled to this. I'll pay it back later. It's sort of justifying why they would actually cross that line and commit a fraudulent act. And I think today, just because we are sort of focused on the SMEs and small, medium businesses with this conversation, we're not going to get into the misrepresentation of financial information too much, which is a kind of fraud, but it's probably more at the top end of town where there's investors and those sorts of things. We're going to sort of stay down at the lower end of the fraud section with misappropriation, stealing, those sorts of things.
And I imagine fraud's changed a fair bit, as you rightly pointed out. I guess I always think just need an opportunity, but you're right, they've got to then rationalise it in their head a bit. So I like it. But it's not fraud. 30 years ago was some employee stealing the bank check or something like that, or doing taking that and going and banking their own account, or I'd imagine it's changed a fair bit over the years, and I'm not that old, so I shouldn't be referencing checks. But what's the the modern technology, and as that changes, the ways that people do these things obviously changes as well. So what's the common ways of doing it? Again, not that we have many in our client base that have those things happen, but out there in the world, how is it happening now?
Yeah, I think it's an interesting point you make around how things have changed. Some things certainly have, but some things haven't as well. So certainly the top international consultancies do a regular sort of economic crime and
Mhm.
fraud sort of survey across the globe, and what they consistently find is a few things, and this hasn't changed much over time, which is usually fraudsters are middle-aged, trusted employees with long-standing tenures. So that sort of the people that you'd least expect are
Is that
the
you and
people
I,
that,
Alex? Kind of
yeah,
thing?
it could well be. Yeah. So I guess that's the part where when I hear clients say, "Oh, we won't put that control and we trust them." For me, trust isn't a control, and I do counsel
Great point.
clients around that, because the surveys do show time and time again that they're the sorts of employees that unfortunately do commit frauds. The other thing that hasn't changed is just around, again, the profile of a fraudster. So always about a third of frauds occur internally within a
Mhm.
business, a third externally. So from people, conducting like phishing type attacks, and that's on the IT side, sending bogus emails, etc. And then the last third is sort of some collusion between external and internal. So somebody outside the business and somebody internally working together
That's
to.
surprising. I'm surprised there'd be a collusion. I would have thought, like, it makes sense to me when I think there'd be, a certain number internally do it, certain number externally. But for there to be a collaboration sometimes is quite confusing because it it's a it's a big move for someone to contact someone else to try and perpetrate this. And
Yeah.
maybe it's not deliberate, but maybe that's just the way it comes out.
Yes and no. I think if you think about how businesses transact, they either transact with a customer for money coming into the business, or they transact with suppliers for money going out of the business. If somebody outside is acting like a customer or a supplier or an employee for that matter, working with somebody internally that has access to systems, that's sort of where that collusion piece can
Yeah.
come
Okay.
in. That certainly things like bribes and those sorts of things fall into the realm of fraud as well. But again, sort of that's probably more higher end of town sort of behaviour. But
Hmm.
that's a common example of that collusion piece. But
And I
um,
liked your point about trust is not control. That's a good one. I like that one.
yeah, it's certainly not. I'll tell you one more thing that hasn't changed, and then I'll jump into the things that have.
Yeah.
But the last thing that probably hasn't changed is just around the ways that fraud is identified. Um, and I'm speaking obviously from a biased position, being an auditor, but auditors are not a good way of identifying fraud. The reason being is that particularly external auditors, they come into businesses for short periods of time during the year rather than, the employees and other people working in the business, day in, day out. So using an external auditor as your fraud identifier and just only relying on that is a surefire way of having some surprises pop up. We obviously
Yeah.
do our best, but we're only in there for a short time. We try and teach our clients, the skills to have the skills and resources themselves, set up their internal controls properly to prevent fraud.
Hmm.
And that's something that they can do, day in, day out in their business. So whistleblowers, whether they're internal or external, as well as internal controls, i.e. system access, approval processes, those sorts of things. Though
So
they're
that's
the
the old
better ways.
segregation of duties and those sort of
Yeah,
things. The person who authorizes it doesn't then process it and things like that.
correct. And segregation of duties is one of those ways that, by having multiple people involved in a particular system or a particular transaction as it goes throughout an organization, you reduce the risk of one person controlling everything and having that opportunity, back to
Hmm.
our fraud triangle, to perpetrate a fraud. So I
so
think
you can't change the risk, but you can remove the opportunity. We can't change the the need that someone has,
yeah.
but you can remove that opportunity as best you can.
And look, arguably, with just from the need or pressure perspective, we've just come through 2 years of a pandemic, and that has affected different parts of society in different ways. There's some parts of the business that have actually done very well out of COVID, and some others that have done extremely poorly. And we're now in this inflationary period, which we have not seen for some time now. Cost of living going up, et cetera, interest rates are coming up. So I would say that on the pressure side of the triangle, or the need side of the triangle, that risk is certainly going up. So it's a topical time to be talking about this very subject.
So what's changed then? That's the usual stuff that's there. What's changed?
Yeah, certainly. So I think fundamentally, there's a couple of frauds that we're going to talk about today that you could commit in a electronic environment or in a more paper-based environment. So I think what has changed is the fact that obviously finance systems are fundamentally more electronic than what they ever have been. A lot of small businesses are on products like your Xeros and MYBs and those sorts of things, and I guess some of the older style controls, two people opening mail, signing off on your payroll check, to use your example before, Brendan, when you receive it, those sorts of things, you can unfortunately fall away from doing the basics just because things are on computer systems. Some of those systems have some great inbuilt controls, but they need to be turned on. And I think, finance managers, CFOs and business owners need to be attuned to what their system does and what it doesn't do, and what risks are present in their organization. So I think that's the thing that's changed the most, is that it's sometimes easy to lose sight of the basics, segregation of duties, to approve any bank transactions, those sorts of things, when everything's on a screen instead of, cash in an envelope or, on the table in front of you.
But even who has, I guess, you can just apply to that digital world, who has access to the bank account, who can do those transactions, who has the different authorization levels.
Yep.
And I guess the other thing I always think of too when in fraud is someone once told me many, many years ago that if you've got an employee member, as you said, someone who's been there for many, many years, if they don't take a lot of holidays, that's a flag as well, because if they're doing it and they're doing it regularly, when they take a holiday, somebody else has got to look after their work.
Yep.
And that's when they'd be fear of calling out. So someone who doesn't want to let go of a task, or doesn't want to take a holiday, or doesn't give up when they go on holidays, no, I'll do all that when I get back.
Yeah.
That's sometimes the great employee that, that's fantastic. They want to do it all, but you also got to be worried about that one as well, I guess.
Yeah, certainly. And there'll be a lot of people listening that will have received some recommendations from their auditors about excessive leave balances. And that's one of the key reasons why we raise that, because the whole job sharing piece, or somebody filling in for you when you're on leave, if there is something dodgy going on, that's an example of where there can be an internal whistleblower that can identify these things, and it gets brought to management or the owner's attention. So that is a top tip, and that's probably something that again people lose sight of, particularly as businesses grow and scale, and you do start to employ people for different tasks. It is still good to make sure that there are backups for, particularly in the finance team, because that's where the money flows through predominantly.
And maybe have two people trained in the job who do it a little bit together. Good for your systems as well, because if someone isn't there one week and comes down with COVID, say, and they can't do it, well, you've got someone else who can do it, which is handy. I'm going to put you on the spot, Alex. You called that a top tip. Give me a couple other top tips, that practical things that people can do out there in podcast.
Yeah, sure. So I think an area to always keep an eye on is the high volume, low value transactions in your business. I think we do, and it's human nature, and for auditors as well, is to focus on the high value transactions. But what has been shown time and time again is that fraudsters start small and get bigger over time. And so making sure that even at low values, that there is a control in place, rather than somebody being able to flow a transaction all the way through the system at a very low value. There are obviously some tools and some data mining and analysis things that can be done, but I guess and that's some of the things that we do as auditors. But I guess for small businesses and business owners, I guess you're not going to fire up Power BI and some other things every week to look at some of that stuff. If you're in a larger organisation, you may well do. But just keep an eye on some of the small stuff as well. So don't lose sight of that. Obviously, the big stuff matters, but the devil can be in the detail and the low value things as well.
Yeah, $500 a week adds up pretty quickly. If someone
Yeah.
if they get away with it once, they might just do it again, and it becomes a bit of a
Correct. There was a fraud that we identified at a client earlier in my career, whereby there was a member of the office was pinching the petty cash once a month. And so that was just a recurring $250 transaction that looked a little strange, and brought that up, and that was a surprise to management, and looked into it, and there was obviously no receipts for the petty cash when it was getting pilfered every month. So so things can happen, even as you might say that that's fairly bold doing that, which it was, and that employee quickly found themselves no longer at that business. But
unsophisticated and risky.
Yeah, very unsophisticated fraud, that one. But stranger things have happened.
So look at the small stuff, procedures. What else? What's a good tip out there for these?
Yeah. So the other thing I wanted to talk about from a top tip perspective, before we get into some of the common types of fraud, is just around the journal entries and credit notes.
Also, like within your accounting system, like
within the accounting system. Yeah, correct. So these things, journal entries and credit notes, etc., are by their nature are manual. You need to go into the system and process the journal entry. They aren't. So that's not the fraud in and of itself, but what it is the way that a fraudster would cover their tracks. So if you are noticing a lot of journal entries being processed by somebody that shouldn't necessarily be posting journal entries, i.e., the finance manager would maybe post some journal entries as part of the end of month processes or what have you, or in a smaller business, I mean, most of your transactions are just going to flow through your regular sales ledgers or your payments ledgers. If you're noticing a lot of journal entries or a lot of credit notes, that's a red flag. That's a red flag for us in audit, and we go in and investigate those. So I think that's sort of more that's sort of like the smoke where there's fire. So the journal entries are the smoke. They're not fraud themselves, but if you're seeing a lot of those in your system,
it could be something that leads that way.
Yeah, correct. And look, even for business owners, running a report from your finance system, there'll be a little field that will categorize, what kind of transaction is it? Is it a sales? Is it in the sales ledger, or is it in the payments ledger, or is it a general journal?
Manual journal of some sort.
Correct. Yeah. So if you just have a look at that from time to time and just cast your eye down, or even, most people have some basic filtering skills in Excel, just filter them and see how many general journals are actually going through. That could be an opportunity to identify something for further review.
I find too a good one that, again, not an auditor, but I find a good one is if the business owner isn't as hands-on with the journals or with the bookkeeping, and then say the Xero file or the MIBE file, I find it really handy to get the owners to occasionally pull up a report and then ask some of the staff entering it, ask them questions about it, purely because even if they're not necessarily understanding what they're looking at, pick a couple of transactions. Hey, what was this one? Can you show me what that was about? And if you seem to be asking questions of your person entering the data, they're going to be seen to thinking, oh, geez, they're looking at that. I better, and I guess it removes that opportunity sometimes. So
yeah, certainly.
Even if you don't know what you're looking at, sometimes ask some questions to find out about things.
Yeah, certainly. And look, one of our clients, global business, the owner is a very wealthy man, and when he travels around between his various businesses and assets across the globe, he still looks into some of the invoices when he's out here in Australia, and that business is worth hundreds of millions of dollars, but he still keeps his nose close to the action, so to speak. So not saying that he has to do that all the time, but that's one of the ways he stays close to the business and keeps an eye on things. And I think there's some merit in doing that. But look, let's get on to some of these common frauds. Yeah. I think the first one I wanted to talk about, which is one that we're seeing more and more of, particularly in the digital age, is just around master file fraud. And so what do I mean by that? So master files are the database of information that a finance system draws upon to make a payment. So, for example, a list of your employees with, their tax file numbers, their address, their names, their bank account numbers. And when you go to pay them, the payroll system will go and grab the data from the master file to then generate, the payment that you then upload to the bank and the employees get paid. The exact same thing happens with your suppliers. So when you need to pay your suppliers and your creditors, there's a listing within your finance system that has all of their names, their addresses, et cetera, and again, their bank account numbers, BSBs and account numbers here in Australia. And when you say you want to pay them based off of an invoice, it'll go and grab that detail to actually formulate the transaction that then gets uploaded into the bank and paid. So there's those master files in and of themselves, necessary part of business. They should exist. They're fine. No dramas. What the fraud is, though, is that we can have Brendan Campbell as an employee of Prosperity, but then somebody goes and changes Brendan's bank account to a different bank account. So when it pops up on the transaction listing for somebody to approve, they see Brendan Campbell. Oh, we're paying him his salary this month. That makes sense, but behind the scenes, the payment is actually going to somebody else. So it's very clever because it's not immediately visible, even on a report that's come from the system.
If you looked at it, you think, oh, that's just the wages. That's all good. Or I guess, and the problem with that, though, that I'm going to notice, if Brendan Campbell's not paid, I'm going to notice pretty quickly.
Yeah.
I guess you could also just add a fake employee in that master file as well.
Yeah, we call those ghost employees, and so it's always good to make sure that when you do get a list of the employees you're paying, that if you've got 40 staff, there's 40 people on the list. It gets a bit harder when it's 4,000 employees, but certainly at the smaller end, I'd like to hope business owners have a fair idea of the number of employees, etc.
If there's a business with a lot of casual staff, it'd be hard to know the names, remember them all.
Yeah. Casuals is when it does become challenging, particularly if your business is seasonal or it fluctuates up and down depending on the time of the week or the month. So it can get challenging. But
you're right. A simple way would be trying to monitor that, just make sure all the names make sense, the numbers.
Yeah. The other way, the thing that we look for is what we call exception reporting. And even something like a Xero, you can turn on this little feature that emails a particular person when a master file change is processed. So even as a business owner in a small business, you can get notified that, hey, there's been a change to Brendan Campbell's bank account.
Yep.
And you might say, well, hang on, I didn't approve that. That doesn't make sense. And you can go and have a look at it.
Yeah,
part of this that we're seeing more frequent is probably not somebody internally changing that to them, to themselves, or, getting somebody else's bank account and making it their own. What we are seeing more of is people external to businesses impersonating employees or impersonating management and saying, hey, I'm Brendan Campbell from an email address that is not too different from your actual email address. So I've just changed my bank account. Please pay me to this new bank account.
It might be a bshamble@gmail or something.
Correct. Yeah.
Bank account. Yep.
And if the people in your payroll team or your payroll officer or your accounts clerk isn't aware to these things, they could just go in and make that change, and all of a sudden, Brendan doesn't get paid his monthly salary. gets, a bit cranky, calls up what's going on. But by that time, the fraudster's got the cash and it usually gets transferred out of Australia pretty quickly.
That's a bit like that one that we've seen people try at our business too. They email and say, "Oh, so and so asked me can you get me some gift cards to give?"
Yeah,
as bonuses?"
exactly the same.
They
Phishing.
pick on someone and they try to get someone to go down with their own money and buy a gift card and an electronic one, and so you got to be onto those, absolutely.
Definitely. And I know we're running short of time. I just want to get through a couple of others, but that Masterfile one's important
it's a
because
short
we're
podcast,
seeing it.
Alex. It's a short one.
Yeah. The FPOS and FPOS terminals. I wanted to talk about these briefly because I've seen some weird and wonderful things going with FPOS terminals. So, what do I mean by FPOS? So, particularly for our retail clients and retail businesses out there, your little bank terminal that people scan their credit card or debit card on to make a payment.
Yep.
When I walk into a business, it's always very interesting with my auditor eyes on whether the FPOS terminal is actually integrated in with your point of sale system. So that means when somebody pulls up a transaction on the till, does it push that information down to the FPOS, terminal to say it's $10 and then you just scan your card, bang, done? Or,
as opposed to when they punch in $10,
then they have to type it in. Yeah, correct. So
if you thought of that,
if you have to type it in separately, it just opens up a small window of typing in a different amount, one through error, which is probably more frequent, I'd like to hope, than fraud. But if they are typing in a larger amount and then refunding the difference back to a personal card, that can happen. And then at the end of the day, your FPOS terminal will still reconcile with your till tape. So there might not be any difference to investigate, but the amounts will still match, albeit there's been a larger transaction go through and then a refund, but the refund doesn't necessarily have to go to the same card. It's possible to do that through an FPOS terminal.
That's a very good point. I never thought of doing that, but that's a clever way to, if someone's trying that. I guess you might even, I think I'm just thinking about a few transactions that I've done recently. I'm normally pretty good at knowing what I've paid for something, but there's a bit laissez-faire the way some people just sort of tap here and you don't always see the amount and you're trying to.
Yeah, definitely. And the other one to be alert to, and all retail employees that are operating, tills and FPOS terminals need to be aware of this. And there was a recent spate, this is probably 2 or 3 years ago, and there was a very well-mannered and eloquent customer would come in and would be, grab a whole bunch of things doing their shopping, and then it would come time to pay, and then the FPOS terminal would get handed over to them. Then they'd go into a bit of an elaborate story, have the employee look away. They'd cancel that transaction, punch in a new transaction, put their card against it, which was a stolen card, for a small amount of money. And then they'd show them, look, it's approved, and then set it back down again. The employee was none the wiser. And they walk out of the business with a lot of goods for not enough money. So it's not just potential employees doing the wrong thing. Customers, if they're clever enough. And look, that gentleman was eventually caught, but he hit quite a few businesses with this sort of very unusual style of fraud before.
I think referring to him as a gentleman was a bit generous there, Alex.
Oh, he was a bloke. Blokes are obviously badly behaved. And then I think the one last thing I did just want to quickly touch on as well is, back to basics, stock takes. So we've spoken a lot about, money here, but a lot of businesses have portable and attractive stock, particularly our hospitality clients, the liquor stock. It's amazing whenever clients do stock takes, it always appears to be, the bottles of liquor and Red Bull and those, small and attractive things that go missing, more so than kegs of beer and other things. So just encourage, no matter what industry you're in, if you are retail and if you do have goods, computer equipment, phones, anything small and expensive, just you should be doing stock takes, whether it's for inventory or whether it's for your fixed assets for your IT equipment. You need to be doing regular stock takes. And if there are discrepancies, you need to have a look into them and investigate them. In the hospitality world, as an example, if there's particular differences between the stock take results and the and what your system is telling you for the stock that you should have. Can you start to line that up with the roster, et cetera, et cetera? So you might get a bit of a sense of who's around when things are going missing, et cetera. But yeah, you need to have that first input, which is, the discrepancies that arise from doing a stock take before we can go and investigate.
This
So
is part of that too, where you can and where it's appropriate. Obviously, have things like cameras in place, or
yeah, got to be
some sort of data
careful. Yeah, got to be careful
where
with
it's
that.
appropriate.
I think there's some workplaces where that's just the norm, and so if you're running a busy pub, I'd say it's fairly normal, and employees and customers expect there's cameras above the till and those sorts of things. If you're a smaller business and it may not be as normal, you just have to be careful with that. I think innocent until proven guilty, of course, needs to apply.
It's a fine line, isn't it, between trust and
and you don't want to go around and annoy all of your staff and get away from taking care of your team just because there might be a small risk of fraud occurring. So it's trying to find that right balance between what controls can we put in place and to monitor.
I like the saying. One of our fellow directors was in Texas, and he shared an image with it. So I think it said, "Trust your neighbours, but brand your cattle."
Yeah, of course. So. Yeah, definitely. That does sound like a good Texas slogan. That one.
So it's a fine line about those sort of things. But as you say, maybe it's just having the controls, but also then having the systems in place. And if you do spot something, it's a little bit strange. Line up the rosters, look at those sort of things, try and work it out.
I think the last takeaway, certainly, if you do identify or you think you've identified a fraud, it is incredibly important that you get some help with that. And that's not just me trying to fly the advertising flag for Prosperity Audit Services. It is incredibly important if you want to make sure that there's appropriate evidence for a conviction or a civil matter if you're trying to get the money back. If you sometimes as frequently as even jumping in on a suspected employee's computer, the fact that you've logged into it could then taint that as a piece of evidence for any future prosecution. So if you've got reasonable suspicion and you've got some evidence, I think that's the time where you need to put your hand up, get an expert in, whether it's a forensic accountant or somebody trained in fraud examination, and obviously that's when police etc. get involved. But if you try and do it all yourself, what I have found is that people end up unfortunately tainting evidence, and it's much harder. The employee will obviously be terminated from the business, so at least the problem will be gone. But it's just whether you want to pursue the matter to the extent that there's a conviction and or if there's a sum of money involved, you can get it back. So just a word of caution to everybody out there on that.
And that's a bit of cost benefit analysis, I guess, then as well, as you work out whether it's worth chasing it and going down that track. And sometimes it absolutely is. So.
Yeah, well, if someone's pilfered, $100 versus $100,000, I mean, your response to that's going to be very different.
Absolutely. Yeah. Oh, look, well, thank you, Alex. I appreciate you joining us on the podcast and talking all things fraud, as ugly as that word is and as bad as that word is. It's good to think about it sometimes and sometimes get in front of it to see how you can stop it by putting it off, or by putting people off from thinking about it is sometimes the way as well. So really appreciate it, Alex. How can people get in contact with you? Email, I assume, would be the best way?
Yeah, I guess all contact details are on the website, so check that at prosperity.com.au, and yep, I'm on there. Or if you just Google Alex Hardy Prosperity and I'll come up. So
brilliant. Yep. Yeah, we'll put some notes in the podcast link as well. So thank you, Alex Hardy, Prosperity Advisors down in Sydney, and thanks for joining us, everyone. I've been Brendan Campbell on business advice in the Brisbane office. For more content and a variety of topics for all your financial prosperity needs, subscribe to the podcast. Hopefully you like this. Give us a few stars, give us a like, follow the links, and head to our website, as you said, prosperity.com.au. Thanks, Alex.
Thanks, Brendan. Good to be here. Let's pick something fun to talk about next time.
Yeah. Thanks for joining us for today's podcast. Hopefully you liked it, and if so, please give us a few stars, like and share. And if you'd like to follow the series, please subscribe and pass any information on to your friends as well if you think they might like it. For more information about who we are, head to prosperity.com.au and follow the links.